Hey, how's it going? We just got the closing bell for Monday, September 8th, and it was pretty much a really quiet day. We weren't expecting the market to go much of anywhere, and it really didn't move all that much. Based on gamma concentrations, our expectation was somewhere between 550 and 540, and you can see that we didn't get nearly that amount of range. We really just went down to 542.6-ish at the low and 547.8 at the high. So we were better bound by 52 and a half and 548. So, sorry, so that was 542 and a half and 548. So just really low volatility, and we can expect more of the same as long as we don't get a big surprise from Oracle. Expect more of the same tomorrow. And then CPI will be the first opportunity this week for us to really see some big fluctuations. So with the prices moving so little today, it'll be interesting to see what happened with the VIX. So we're going to go over here and take a look at VIX. And VIX is down. Okay, so that's in line with the price movement that we saw today. We did dip below 20 at 19.56. So we're not nearly as nervous as we were last week, but there's still potential for us to keep on moving downwards. If we don't get anything crazy with the CPI or the PPI, then we're good. Then we're probably just going to keep on chopping sideways until we get the rate cut announcement. Oh, and of course, I'm forgetting the debate. The presidential debate is tomorrow at, I believe, 9 p.m. Eastern time, 6 p.m. my time, Pacific time. So that could definitely introduce some volatility and some directionality to particular sectors. And depending on what those sectors are, that could influence the direction of the S&P 500. But for now, there's really no good way to predict that. So we're just going to wait and see what happens. We're just going to expect that chop sideways tomorrow, maybe volatility and directionality on Wednesday, especially since I think CPI is coming in on Wednesday as well. CPI, yeah, 5:30 in the morning. So we'll get the result of the election and not the result of the election, but the reaction to the debates and the result of the CPI report. That'll figure into Wednesday. So Wednesday could really be volatile. We may want to hedge against that. We might be able to take a VIX play. We might, if we're afraid of the downside, which there is more downside risk than not, then we could go in and put in a hedge. And so in a moment, we'll take a look at where the best sectors would be for us to put in a hedge. Let's see how our sectors perform today. And actually, before we do that, I want to take a look at momentum. We looked at it this morning and we just saw that it was in the middle of nowhere. It didn't really give us any direction whatsoever, which was good news because after that big down day on Friday, if we had seen continued momentum or if we saw momentum to the downside, that would have clued us into further downside movement. But since we didn't really see anything, we were a lot more comfortable figuring that we just chop sideways. So today, 186 new highs. That's interesting. That's definitely up. And then lows at 73. So more up than down, which I guess we did sort of bounce in the S&P 500. I wouldn't get too excited yet because we are below that MA50 and a whole cluster of other moving averages right now. So there is a little bit of a ceiling right there, or at least a resistance right there that we'd have to work our way through before we start to get bullish. So most likely, again, tomorrow, sideways chop. Let's take a look at the sectors. We'll take a look at graphically, and then we will look at it from our normal stock fetcher chart or scan. So, well, mixed bag. Everything's kind of clustered right here. So no real super standouts, except for maybe XLC down, which is interesting. Earlier in the day, you could see that XLK and SMH were really struggling, but they recovered to about break even or to about same as the overall markets by the end of the day. So that is somewhat positive news for those two sectors. And then XLC is also part of tech, though, and that is the one that ultimately ended up lagging. We've got XBI and XLU near or towards the top of the middle crowd, and then the standout is XLRE. So that's interesting that real estate is outperforming today. Let's take a look at XLRE. Oh yeah, XLRE is looking great. Nothing wrong with real estate right now. I'll probably, that may change after CPI and going into the Fed rate cut meeting. But right now, real estate is looking really, really good. The other one that I was looking at earlier this morning, that we saw earlier this morning, was XLP. So XLP, yeah, still doing great. XLU, not as good, but a little bit of pullback to the EMA8 bounced off of it though. So XLU is still looking great as well. So I wouldn't mind exposure to long side in any of those three sectors. Right now, it's going to be very critical to pick your sectors very, very carefully and to really stick to them. Even if you have a stock that looks really good, that's not in one of these sectors, it's probably best not to go into it. So I made the mistake of going into T-Mobile a few days ago because I felt that XLC was going to keep on outperforming the rest of the tech sectors and do very well. And of course, it just dumped with the rest of the market on Friday. So, and then T-Mobile, you can see it's still looking good and healthy, but it's just not the same as being in an XLU, XLP, or what was the other, real estate. So, so I'm going to be correcting that in my portfolios soon. And we really just want to stick to the XLU, XLP, and XLRE. So if we take a couple of examples, like what if we had stuck to that? Let's just see how bad Friday was. Because look, Friday wasn't really bad for real estate sector at all. So if we just say, like, for example, American Tower, see, it continued to move up. I think Crown Castle, there you go, Crown Castle. Yeah, it continued to move up. Another real estate would be Boston Properties. I believe that's BXP. Boston properties. I think it's BXP. And you see that one's just, it didn't get hit really hard on Friday. If we pick some classic staples like Campbell Soup, that didn't get hit on Friday. Today it's really just flat over the last 3 days. We look at Clorox Bleach, doing quite well. Let's take a look at maybe Walmart, flat. Let's take a look at another good KO, Coca-Cola. Okay. So Friday, it actually pulled back a couple days before. Friday was a bounce day for it, and it's doing better. So as long as we pick our sectors really well, then that's more than half the job. So we really do want to stick to those sectors very closely, especially after tomorrow when we get that debate between the presidential candidates. The sectors are really going to tell us the story of how the market feels each candidate is doing. And as long as that sentiment remains with one candidate or the other, those sectors are going to be very steady going into elections. So we want to be very careful about selection right now. We may even want to just sit on our hands until tomorrow after we get the presidential debate. I'm not going to do that. It's not my job is not to do that. But well, I'm going to do my best and just be in these very good sectors that should do very well, irregardless of which candidate that seems to be doing better. And for now, the XLP for sure fits under that category. Real estate, I need to analyze that a little bit more before I decide on that. And utilities should do quite well as well. But the one I'm most comfortable with is XLP at the moment. That should do well no matter what. And then to the downside, we were looking at XLC was the worst performer today, which is still up 0.4%, but it's at a critical decision point that is for now support. If we look at XLK, it's below it It's right. We ended basically right at the MA 200, but that's resistance for it right now, and that annual VWAP. So XOK, I'd be very, very careful with. I need a definitive break upwards before I'd be comfortable going into XOK type of stocks. The same is probably true for SMH. Yeah, SMH is just slightly better shape because it did close above that MA 200. Still plenty of resistance above it. So we need a definitive break upwards. I wouldn't even touch this until maybe 260, 265. So we need a nice long recovery before we would even consider SMH. So actually, the last two sectors, XLK more so than SMH, these are going to be good candidates for a hedge over the next few days. So we could, if we have time, we'll take a quick look at a possible hedge using XLK or a particular stock in XLK. Let's see if we can, at the very least, get a tail risk trade as an example. Okay, let's see. And then let's take a more numbers, less graphical visual look at how our sectors did today. On a average basis, you can see that we've got gold that is defensive, silver, utilities at the top. Home builders is an interest rate play, defense, and financials. So that is a little bit of a mixed bag, but mostly defensive. And then right after that, we've got real estate, SMH, XLP. So that now it becomes a really big mixed bag. So that is indicative because this is a look over the last 6 months. You can see that over the last 6 months, starting in March, we can see that there has been quite a bit of volatility up and down. So we want to be looking more to short term right now. So let's take a look at just let's take a look at 1 month. Okay, financials, discretionary, like I say, a big mixed bag once again. We've got discretionary and staples right next to each other. That's super unusual. Okay, and then now let's look at 2 weeks. 2 weeks, you start to see it's a lot more defensive. And then let's look at today. Today, defense looks like, is this correct? 2%? Yeah, it was correct. Okay. So on a percentage basis, it looks like SMH is up there. From a graphical representation, you can see that it's not really doing all that great, but it did have an amazing recovery during the day. Where is it? There we go. Because this is SMH, this purple line right here. So maybe I can get rid of some of these lines temporarily. Okay. So you see that SMH really led the market down. And then by the end of the day, it was in line with the market. It was below the market all day long. But that last half hour recovery, and actually, I guess the last 5 minutes recovery really brought it in line with the S&P 500. So there should have been ones that outperformed it. That gold, which one was this? Yeah, gold was about even. Energy is a little bit worse. Healthcare. So why is my healthcare? Where's my XLV? Way down here. 0.62. 0.69. Okay, so in line. Okay. So it's a relative basis. That's why we have to compare on a we have to adjust the scale for each other. So we see that over here that's 0.7% versus the SMH it says 0.1 or 0.07. I'm not sure which one it is, 0.15 or 0.07. That's because This is the indexing off of the S&P 500. That's the difference. So on the stock fetcher, we're indexing off of our own open, and on this one, we're indexing off of the S&P 500. We're comparing against the S&P 500. So against the S&P 500, the SMH basically was on par, broke even with it, but the XLV outperformed it. That's why it looks like it's up here. But on a percentage basis, SMH really performed. It recovered more than any of the other sectors. So I would go by this comparison more so than I would go by just a raw percent basis. Just if we're looking for strength. If you're looking for a return, then you can look at the percentage basis. But right now, I would not be too confident in SMH. But even more so, looks like XLK is underperforming SMH even. So we'll take a look at a hedge in that. Okay, I want the poorest performers. Is NVIDIA the poorest performer? That'd be kind of funny. No. Okay, there we go. SMCI is the poorest performer. Intel's not doing very well. Intel is at risk of being delisted from the Dow Jones Industrials. So this could be, well, I wouldn't, if I'm going to hedge, I want to just hedge market. I don't want anything going on in the individual stock itself. So a lot is going on. SMCI is getting a lot of attention right now, a lot of supposed accounting issues, and then the Intel being potentially kicked out of the Dow Jones. Those would be ones that we would want to avoid as a hedge. We could trade them as an individual stock, just as a position, but we wouldn't want to use them as a hedge because they could do something completely different than the rest of the sector or the rest of the market. So we want something that's going to follow the sector and follow the markets quite closely. JBL looks like a pretty good candidate. CrowdStrike is looking very good. And Lam Research, that is a semiconductor stock, that is looking pretty good as well. Synopsys. Out of all the ones I see, I think Synopsys is probably my favorite so far, but it might have moved too much. SNPS, S. This would be a continuation. Could pull back. What was the other one? LCRX? LRCX. Similar for LRCX. What was the first one that I looked at? That's CrowdStrike. Okay, so I'm more comfortable with CrowdStrike just because it hasn't made that huge move yet. So technically, it's not as weak as those other two, but it's still relatively weak to the rest of the sector, and significantly so. So I'd be more comfortable with CrowdStrike just because there's a larger distance before we get to some sort of support. So we could do a CrowdStrike. And we would probably want to protect at least through the rate cut, rate cut decision. So October 18th is good. Let's just do basic long put. And let's see. So if CrowdStrike drops, let's see. If XLK or QQQ or SPY, let's see. If the SPY drops, let's say to the MA200, That is a 30-point move. Okay, 5.5%. Okay, that's 3.85 ATRs. And if I say CrowdStrike, we'll do it by volatility since volatility is elevated right now. So if I say 10.51 times 3.85, 40-point drop in CrowdStrike. So roughly we'll call that 205. So that's fair. If S&P drops to the MA 200 and CrowdStrike drops to support, that's a good place to mark. We won't want to assume that it could easily break support. So that would be a roughly equivalent move. Okay, and if we could get down to 205, just say by expiration, then this would be worth 45. Why is this? I guess the puts are pretty expensive on this. Let's do it this way. October 18th, 250. Yeah, they're pretty, but they're nice and tight for such expensive. They're really tight. That's really good. So let's just say if at expiration, or wouldn't want to hold it to expiration, but let's just say it goes down by 40, then this theoretically is worth 43. So that's almost a triple. Okay, and if it happens, just say it happens a week after the rate cut decision. So rate cut decision, September 18th. So let's just go to 27th. Okay, this goes to similar, well, 43. So basically it goes so far into the money that the time doesn't really matter anymore. So basically we're looking at a potential triple, and this would be a hedge. This would be a very expensive hedge though. So probably not the greatest example, but tomorrow I'll look for a cheaper example, but at least you go through the exercise and get an idea of the hedging process. So just as a quick recap, S&P most likely chopping sideways tomorrow, volatility after the presidential debate and the CPI reports come out. So Wednesday will probably a volatile day and potentially a directional day. We can't say for sure, but potentially a directional day. We have more risk to the downside than to upside. So if we do get directional, it is more likely to go down. And that's why we took a look at hedges today. So tomorrow may be a good time to take a look at hedges because that's your last trading session before the volatility is most likely going to pick up. So just plan ahead. And if you need to put on some hedges, just take advantage of tomorrow's session to do that. So that's it for today. Have a wonderful rest of your day, and I'll see you guys tomorrow morning.